how would you like to make your first million? And today we have Jack Corrigan. He's joining us from Texas, and he's a skilled investment professional with experience in real estate, private equity, capital markets, financial modeling, and investor relations and fund associate at the Loki Group. He supports the firm capital raising efforts, investor communication, and fund operations, ensure alignment between investor strategy and execution. So, Jack has underwritten over 80 million in transactions and leveraged AI and analytics in portfolio decisions. So, Jack, tell us, what are the 5 steps that you recommend entrepreneurs in order to make the first million?
Welcome to Unstoppable Podcast with Harry Sardinas, inspiring conversations with influential millionaires, investors, thought leaders, entrepreneurs who are making a massive difference with their innovative products and services, and sharing the challenges and wisdom of how they sold their first million.
Thank you so much for having me today, Harry. Really excited to answer that question. I'll give you the first 5 and happy to dig into it more as you and the audience are welcome. First, maximize income early, work as many jobs as you possibly can, figure out what you're good at, what you like. 2, live below your means. If you can afford something and you find something that's a little bit cheaper, maybe it's an alternative, standard of living still fairly high enough, I highly recommend it. 3, invest very intelligently and very aggressively early. You want to see that compound growth. You want to see really strong returns once you have actually invested. Do not hesitate to invest when you're young. I think that that's one of the biggest parts of entrepreneurship and understanding the time value of money. 4, leverage smartly. Do not use a ton of credit card debt. Do not take out a million loans. Do not, under any circumstances, overbear yourself and burden yourself with debt when you're young. That's just difficult to get out of. And 5, build ownership and own multiple income streams, whether you're working multiple jobs or you've had multiple successful businesses, you've sold them off potentially, maybe you have equity stakes. There's so many things that come from core income, investment income, side hustling, which, that's a lot of what our firm does, and happy to dig into that as well. But those are my top 5, Harry.
Investors are good entrepreneurs, but on the other side, it doesn't really work as good because not because you're a good entrepreneur that means that you're going to be a good investor. So can you explain a little bit more about this dynamic? I think because investors are more conscious of risk and they know the numbers more effectively, right? They only take calculated risk, which is something brilliant if you're running a business. But why do you think that this is my opinion, right? I think that investors are good entrepreneurs, but entrepreneurs not necessarily are good investors. Can you expand a little bit more in that statement? Do you agree? You disagree?
I half agree and I half disagree. I think that at the end of the day, you're completely right. Some investors are not great entrepreneurs and some entrepreneurs are not great investors. With that said, though, I think that that should go back to the first statement that I gave of maximize your income early. Try as many different things as possible. Even if you're investing early, spend $100 in the stock market, get a better understanding of what you can do through Robinhood, Fidelity, Charles Schwab. There's so many different brokerage accounts out there today, and it's so easy to get in. Not saying by any means, just give your money to the Wayfire. Maybe invest in the S&P 500. Look at some of the really strong growth stocks that have taken the country, the world by storm over the course of the last 12, 24 months. You got the FANGs and obviously everything with the Magnificent Seven that's been crushing it with NVIDIA. And then you get companies like Palantir that are, just rising. In my own portfolio, I typically like to be a value investor and I look at things that, come down from all-time highs like UPS or United Healthcare. There's so many things that everyone should do their own research on, of course. But again, to answer your point, Harry, I could not stress enough to just get out there and start learning and figure out what you're good at and what you're not good at. Build a team around you. Go to class. Look up YouTube links from Harvard Business School. It's never been easier to become an entrepreneur, and it's also never been easier to find the right information.
And understand, because this dynamic, you see, when you become an investor, money goes and work for you, right? And money doesn't get tired. It works Monday to Sunday. So, 1 out of 5 millionaires that we interview in this podcast on Unstoppable, they are property multimillionaires. So, why do you think that property and real estate is a good vehicle to become wealthy, and why?
I think that there's a ton of great assets and great opportunities out there. For me personally, area, I grew up in the city that never sleeps, Manhattan, New York. I'm not going to tell you that I was always attracted to real estate. I was always attracted to what are they doing in those big buildings when I was growing up as a little kid. But
Expensive New York,
very, very much so. It definitely taught me how to hustle early. But at the
huh?
same time, it really gave me a foundational understanding. I guess going back a little bit here, being in New York, just how to be a people person. It's really easy to meet people when you're in the most dense city in the history of the world and also the most diverse. So many people from so many different backgrounds. Shout out New York City. Love my hometown. But uh, again, kind of going back to, I guess, what we were originally talking about versus, entrepreneurship and investing. I think that was also another thing that I was pretty spoiled of growing up in that I got to try a ton of different things from being a bar back to working at a gym to being a tutor. I mean, I did a lot before I was 18 and I learned how to hustle pretty young.
And then, how come you end up in financing for real estate?
Yeah. So never forgot the day that my mom told me that I didn't get into the University of Texas. That was my dream school, when I toured and I was in high school. Looked her dead in the eyes 3 seconds later, said I would get in next year. That's exactly what I did. Went to Fordham University, a phenomenal college, for about a year after graduating from Fordham Prep in the Bronx. Commuted to school there for about a year and did everything that I had to do to get a 4.0. Transferred into UT, got into McCombs, and never looked back. Fell in love with real estate, fell in love with finance. Happy to get into, I guess, how that happened and how that situated as well. But could not be more thankful
Tell us,
for
tell
every
us, tell
opportunity.
us how you
Yeah,
end up
yeah.
there. So would you be
So
looking at real estate, because you see you were working in the gym and in different jobs, but somehow you landed in a space that is one of the most uh, one of the most popular spaces in order to become wealthy, especially if you're in finance. So how you end up there? A friend told you, out of luck, you read the book. What happened?
So I did read a book. I read, when I was 20 or 21, maybe Rich Dad Poor Dad, and
Mhm.
really, really appreciated for a number of reasons. I was going through some personal things at the time with my own family and my dad. And on top of that, I just needed some mentorship and get a better understanding of, it's sophomore year. I go to one of the best universities in the world. I need to figure this out.
Mhm.
And I started going to more networking events. Shout out to the University of Texas Real Estate Center and Mandy Pope and her team for everything that they do for students. But from going to networking events to meeting people locally here in Austin, they do stuff in San Francisco. I think the networking area was
Mhm.
unbelievable. The way that they are just able to communicate with different companies and different people, communicating schedules, timing, tours, you name it. I've always found that to be so interesting. And I completely believe that I am spoiled in that regard. I don't think that a lot of college students are able to go tour massive buildings or industrial properties or office trophy assets or anything along those lines. And to your point again, that's how a lot of people can get very wealthy in this industry. You can do a lot of different things from property management to financing to investments to development, you name it. But again, at the end of the day, I fell into this mostly for the people and understanding that being a people person is who I am for the most part. As much as I love to underwrite and get into Excel and understand certain metrics and returns, I am a people person first. And
Mhm.
I fell in love with real estate because of the people and because of the opportunities that come with it. And obviously the learning curve and the path of growth. And to your point again, Harry, this is a very, very lucrative business. And I love meeting lucrative people that, like to have a good time, just like me.
Mhm. So on the other hand, sometimes because my first business was in real estate, we managed to sell with 5 million. We were doing something called rent in London. Um, Maybe when I was your age, I used to have hair back then. So and so, what do you what advice or what message do you have for the young generations, right? That again they want to jump into real estate. They say, "Wow," because it doesn't matter what we discuss here. They see 1 out of 5 people coming to this podcast, they're real estate millionaires, and they say, "Okay, this is an amazing vehicle." But when something goes wrong in real estate, is you take a hit, yeah. We're talking. It's not about if something goes wrong in another type of business, right? Maybe you get back up and easy, and you don't you lose a lot of money. But when something goes wrong in real estate, you can people can lose a lot of money, right? And
Absolutely.
we only hear the stories here of those on the win, the winners, the people doing well. So, what advice as investors you have? You have for the young people listening, right? In terms of real estate investment and how to mitigate the risk.
Definitely. So the one
What
thing
kind
that
of
I would
returns they would be looking at? Because this is stories that you hear, right? Well, I did this deal because they promised me that I'm gonna get this amount of return, and then people go there, they put the money, and it's all gone because they're taking a huge risk. Whether all the deals maybe doesn't look like so amazing in terms of return, but there is something solid that you can see in front of your eyes that the return will be there. So, in terms of returns, what do you think, in your opinion, that is realistic in real estate? And when things got out of this deal, people need to do the due diligence deeply because they can be taking a huge risk, right?
absolutely. And like I mentioned earlier, everyone should do their own due diligence, understand what you're investing in, understand that there's always going to be risk. The worst thing that you can ever invest in is something that says that it's risk free unless it's a government bond. Risk free to me is the most dangerous sentence to put in a financial term. Um, but with that said, Harry, don't be afraid to make mistakes when you're young. That's not
Mhm.
to say go out and make them intentionally. Again,
Mhm.
do your due diligence, underwrite properties, get a better understanding of how to underwrite, what metrics you want to look for, and understand what those metrics really say. But at the end of the day, in terms of really getting in and just being a part of the game, if you got skin in the game, you stay in the game. If you're
Mhm.
invested, you're going to continue being in that investment. Now, again, to your point, real estate can be risky. There are lots of different properties and things that I've underwritten in my career, from retail acquisitions, and essentially managing a portfolio of retail properties, understanding what may have happened if a tenant left or something in a lease clause didn't work out, something that we underwrite to, Harry.
Mhm.
Understanding again, what are lease structures, what are rent bumps looking like in retail properties. I can think of in a past transaction, in another opportunity that I previously had in my career, we were looking at a Starbucks, right? We were trying to purchase it, and we underwrote to, I want to say, a 8% IRR. Again, very core asset. We were
Mhm.
buying it to make a strong return, but at the same time, making sure that we're going through our own due diligence process. Finally, we get to the very end of the deal, ready to go close it. And there's a clause in the contract that Starbucks could leave if the property gets sold to an institution like the one that I was working for. Of course, that completely blew up the deal. We could not invest in it. It made it, you know, we didn't waste our time. That's another thing I also want to point
Mm.
out, Harry. Every deal is an opportunity to learn, whether you do it or not.
Exactly.
And I think
Oh
that
wow, that was a tough one.
it
So
was it
so
was
you
totally
were
tough.
acquired the property with the Starbucks within, but if another company will acquire that if you sell it, uh, basically if you sell it, Starbucks could leave, right?
Yes, and then we would have just bought a property with no tenant in place. The rents could have been completely thrown out the wayside. We
Whoa.
would have had to re-tenant the
Mm,
entire property. And
mm.
don't get me
Huge
wrong,
risk.
Harry.
Yeah.
Exactly. There's risk there that we weren't prepared for in our investment thesis. Another private equity shop that is targeting that specifically, like going in, retenanting a building, taking in proceeds and certain fee structures based off of those retenanting. Maybe they hire a broker in-house. They can make that brokerage fee really quickly on the lease and then resell it again. I mean, the possibilities are always endless in real estate. That's part of the thing that I love so much about it because it's so entrepreneurial in the same way that finance is. But again, you need to understand what you're getting into. There are always scenarios that, again, you can't plan for. You can plan for them at the end when you have them in front of your face. But if you don't understand, or not understanding isn't the proper term, but if you don't see something that you want to see and then it comes back to bite you in the butt, that's real estate. That's part of the process. Obviously, you want to mitigate it. You want to be aware of everything. A really strong part of doing so is having the right team in place. Thankfully, we obviously had a fantastic team that was able to look into some of these lease structures, understand like, hey, this can be a really big problem in the deal if we do buy it. And that ended up with us not purchasing the property. But some of the best deals that you're going to do, Harry, are the ones that you don't follow through with because of something like that exactly.
Yeah, you learn. You learn to be aware. Like, oh, I did, I,
Hmm.
I did, and the due diligence is something that, especially in commercial, well, in commercial, in residential, um, you have to be able to analyze because sometimes you get the deal and you get excited, yeah, you get emotional, like, yeah, this is gonna work, I'm gonna make a ton of money. Oh boy, and something can happen. You know, when you're talking about commercial, we're talking about the speed of finding the tenant in commercial depends what the property is. It's not as fast as the residential, right? You could
Of
be
course.
empty a year, yeah, or two.
Yeah. And I think that
Uh,
one thing that really does help with that is obviously a lot of AI tech that's come out over the course of the last, call it 2 or 3 years. I'm happy to go into some AI applications that I've used in the past. And again, Harry,
Absolutely, absolutely. Then,
sure.
if you can share with us which AI application can make the job or the due diligence easy for the people investing in commercial and real estate, absolutely share with us. That would be amazing. Thank you.
Sure thing. Shout out to Placer AI. Not sure if you've ever heard of that one, Harry, but
Which one?
Placer AI,
Pleasure.
PLACER.ai. If you actually look it up specifically for retail properties, think of any tenant in the world, like, I don't know, Wendy's, for example.
Hmm.
You
That's
could
a
look
good
on
tenant to have.
Placer. It's a great tenant to have. Those
Oh my,
QSR
that's
properties
it.
sell
It's
really
like a bank.
quickly.
Yeah.
Yeah, exactly. If you go into Placer and type in that specific tenant, it'll show you every single Wendy's. And again, you can quantify it as much as you want, from zip code to county to city to state to nationally. And if you want to do national, Harry, you could literally see what's the worst Wendy's in all of America with the slowest foot traffic, what's the highest Wendy's with all the strongest foot traffic in the world, and why is that? A lot of times it's going to be in denser cities or really strong communities with public schools or something like that, where you can almost identify immediately strong value opportunities that'll appreciate over the course of the next, give or take, 10 years. Obviously, there's always economic conditions that can change that, from political
Hmm.
passings from whoever's currently in Congress, to presidential executive orders like Trump's big, beautiful bill, to a couple of other different things that are probably blanking on my head right now, to sometimes even brokers that you're working with. As somebody who's been in brokerage in the past and is currently licensed, I take that so seriously. The last thing you ever want to do is burn a bridge. The last thing you ever want to do is have anyone talk poorly on your behalf. Uh,
Hmm.
I've always done the best that I possibly can to be grateful for every opportunity that I've been given. Uh, and obviously come away with the learning experience too at the end. But making sure, again, that you're always transparent with people, to me, is the most important thing in any business.
I mean, commercial, when you have a good tenant, I mean, if you have a bank, like a Wendy's, like you said, it's like a, you hit the jackpot, right? Because no headaches. And so but in order to, to uh, to in order to do those deals effectively, right? Ideally, you should have the deal and also whoever is going to operate the business on top of the property, right?
Right.
Uh, so it's kind of like matchmaking, right? So, this any other AI tool that you guys use uh, in order to get you more data?
Sure. Shout out to one of my mentors, Spencer Burton, currently creating AI agents for commercial real estate. Also my former boss. But Spencer is one of the smartest guys I've ever met. I try to meet up with him probably about once every 2 quarters or so,
Wow.
just catch up, hear what he's working on. He did just release something that's currently in beta. It's called AI Edge. It's essentially another program, Harry, that teaches you how to use AI properly, from making the right prompts, making the right suggestions,
Mm-hmm.
understanding AI
That'd be helpful.
hallucinations if it makes something up. Uh, there's just a lot of other opportunities out there to use AI the right way. I think that Spencer's doing a really, really, really good job of
Oh
making
yeah.
this course.
So am I one of the 500 million that we interview here in property? The other one out of five that are in tech. So if you're doing property tech, you are you are in the right in the best of both worlds. Yeah, in my opinion. So do you think that AI will revolutionize the way that we do commercial property in the future?
Yes and no. Yes, for, in my lifetime, 100%. Do I think that AI is also overvalued right now? I've said that multiple times. Uh, from understanding price to earnings ratios in the stock market to different company valuations, I'm not saying that we're necessarily in a bubble. I just personally believe that some companies are a little bit overvalued right now. Again, part of that is because there's so much capital rushing into, data centers, Harry, or you get Meta with Zuckerberg and Trump having a dinner, and he's saying $600 billion being committed to the US over the next few years. And obviously, all of that's going to drive massive growth for these companies. But at the end of the day, I see them being way, way, way stronger in valuations in about 20 years. I think that right now it's a little overinflated, but who knows? I can't predict the future.
Hmm. And the use of data, right? And with AI, they are the biggest. All the big players have been start to developing this, and electricity consumption has increased in the whole planet
Yeah.
because of that. A lot of data centers and where are we gonna find computer power in order to process all this data. And so a lot of challenges are coming with the what we call it AI revolution. But I remember that probably when I was your age, that then I started my first business. English not my first language, and I have to do a business letter. It used to take me like a week, I had to write this, then to find a friend that speaks English properly, then tell me to fix it, then going back, fixing it. Then at the beginning, I will start to write in my own language. And now, in a couple of minutes, you go to AI and say, look, can you write the letter? I want that this, or a contract. And what you get back is something kind of pretty amazing as a starting point. So a lot of things are changing with this revolution, but in the commercial real estate space, there is not too many people are in this space because it's like a big game. You need a lot of money, and I I know people that have actually been in this podcast. They have been real estate investors, retail. They have buy property, they sell property and everything. And after they build certain well, they start to do commercial. They have told me, Harry, it's amazing, because you don't have a tenant calling you, my toilet is broken and things like that. Sometimes with commercial, you just give the space and that's it. and the tenant need to paint it, decorate it, deal with all the issues, and uh, apparently, it's more handoff operation that the other one, which is those one that you buy a house and then you put tenants in, something's broken, you need to go back, the maintenance, the repairs, property management, right? Um,
Yeah.
so in terms of property management, um, uh, normal tenants, residential versus to commercial, is this easy commercial or is just a myth?
Meaning, can you
In
rephrase the
terms, in
question a little
terms
bit?
of yeah, in terms of work, right? In
Yeah.
terms of labor, some people are commenting me, right, that if you do with property management for a commercial, right, you need to do less for a commercial, let's say warehouse, let's say um okay, change of Wendy's, things like that.
Yeah.
You have to do less work than if you're doing property management with residential, because property management with residential, if you have 200 flats, then you have minimum 200 tenants. So it's 200 bathrooms to fix if something goes wrong, 200
Sure.
people to keep. Whether when you're doing commercial, you only have one tenant with a big thing, and usually you just hand over the property with the contracts and unless that something really, really goes wrong, I think the tenants will have to look after everything. And some people told me coming from residential to commercial that the property maintenance, property management is easier in commercial than residential. So, do you have any? What do you think? Is it really true that residential is easier than commercial? The the
So I
commercial is
think
easier than residential in terms of property management.
I think it definitely depends. So I correct me if I'm wrong, Harry, but I think that what you're referencing is, 200 units in a multifamily building that have 200
Versus
toilets,
versus a
maybe,
warehouse. Yeah, versus a
yeah,
warehouse.
yeah, definitely. So again, I think it totally depends. I mean, I've been fortunate enough that I've been able to tour some sites here in Austin that, it's owned by Tesla. Some of those, actual industrial facilities are really hard to manage and
Mhm.
they require such delicate work. And
Wow.
do not get it twisted that, there's a ton of AI that goes into it. I am sure that they have the most advanced tech in the world, but at the same time, it is hard to manage. Conversely, to your point about a multifamily project, those are also really hard to manage. And I'm not going to sugarcoat that I have very limited experience in the property management segue.
Mm.
I on the side in college, I was an Airbnb host,
Ah.
constantly tried to cater to properties, clean things up. To that extent, I completely agree with you. I'm not a plumber by any means. I would
Mhm.
need to call one if my toilet got broken. With that said, if it's in a multifamily building, I would think it would be pretty difficult to do 200 toilets if a water
Mhm.
pipeline broke or something like that in the
Mhm.
facility, and now none of the tenants have
Big
water.
job. Big job. Yeah.
Exactly, and that would be something that has to come in immediately and get fixed because I can't have 200 people paying bills and they don't
Mhm.
have access to running water.
Mhm.
Um, Again, it really does depend on the property. It always depends on the investment. I would say it also really depends on the square footage and specifically
Mhm.
in multifamily as well. How many doors or how many units
Mhm.
are there? How many, beds versus bathrooms? Maybe there's a 2x1, maybe there are 2x2s in some units, maybe it's a 1x1, maybe it's a studio.
Mhm.
Uh, I would say to answer your question, it always depends. And I'm sorry that that's kind of a general
Mhm.
answer, but it does always depend. And I think that that's kind of another beauty of property management. Uh, you get what you get in terms of
Mhm.
the people working on those projects. Some of them are going to be lights out. When I was growing up in New York, we had a property manager named Jose that would come to us at 11 p.m. when,
Mhm.
the water was broken in our multifamily complex in New York. Conversely, that has not happened here in Austin. One,
Mhm.
because they don't have a Jose who's actually a killer of a property manager. And two, again, that's New York versus Texas, which
Mhm.
no complaints. It's just different.
So, Jack, if someone is in love with our conversation, want to find out more about you, can you describe how can they find you and how can you help them? How this process work?
Absolutely. So to anyone listening right now, look us up at theluckygroupinc.com. We're essentially working on assisting qualified homeowners or qualified borrowers own homes throughout the US. We're currently licensed in 3 states, looking to expand that to 10 as operations really start to ramp up. Think of people in the gig economy, people on 1099, or maybe they have contract work, Harry. These people should obviously be qualified to get homes because, again, they're working and they're working hard. Like I mentioned, try everything that you can, get out there, go make some money and make some mistakes while you're at it. But in the gig economy and where we see projections as of right now, we see the workforce being 35% gig workers by 2035. That's 10 years away from now. Because of that, it creates a really, really unique opportunity to get into this space where we can identify people's outstanding debt. Have they ever been late on mortgage payments? Have they ever been late on credit cards? Like I mentioned earlier, the last thing that you should do is overburden yourself with debt when you're trying to become a millionaire. But our program allows you to become a homeowner, which is fantastic. Obviously, it gives you HELOCs. It gives you opportunity to own a home. To your point again about property management, there is a little bit of a difference in our business model in that if something does break in the home, it will be on the tenant to fix it. We're going to do everything in our powers. So long as we can qualify you, so long as you give us a home buyer down payment, we will go in, buy that home, sell it right back to you same day. No ifs, ands, or buts. We'll then originate a mortgage on their behalf after we've gotten that down payment, whatever the difference is. We then lend to it. Over the next 30 years, we take in fixed income based on that note. There's an opportunity to refinance later down the line. We obviously don't want people to be paying super high rates. At the same time, we need to make sure that we're returning our required returns for our investors, which is a 10% annual return with a 12% target IRR. There's a 1-year lockup period within our fund, which I always tell people off the bat because I don't want anyone to say, where's my money in a year? But it'll definitely be on its way once you've invested for over a year annually, every quarter, 2.5%. We're trying our best to make sure that we can get that a little bit higher. It will get higher as operations continue to expand and we're more licensed in more states. Just currently capital raising, have a long, about 50 or so pipeline of people that are currently waiting on their homes that we either need more capital in order to go buy them. We're waiting on more payments from outstanding clients that we've already catered to go in and buy more homes. And again, we're just really excited to continue our journey here at the Lucky Group.
Thank you so much, Jack. And with that note, see you guys in our next episode of Unstoppable. How brave entrepreneur like Jack break that wall and achieve the first million. Bye for now.
Follow us for more interviews with world's most influential, audacious entrepreneurs that overcame challenges and adversity, providing you with the blueprint of how they sold their first million so you can grow your business exponentially.